Are you worried about your interest rates, your mortgage payment, and what is happening with the real estate market here in the Raleigh, North Carolina area, and most precisely in Cary? We're here in Cary. What's happening? So if you're relocating to the Cary area, please connect with me and to Johan because we can walk you through all of the details on how to buy a house with the new rates and how to drop those rates. So in today's video, I am going to cover this very hot topic of buying a house, lowering your interest rate. What's the difference between a permanent rate buy down versus a temporary rate down? And also Johan here is going to tell you and just give you some education, some details on what everything means so you are educated. Johan, thank you for being here. I appreciate you and your business.
No, thank you so much, Yoana. I'm very excited to talk about this concept. I don't think that a lot of people are aware that it exists. Even with existing homes, we're seeing a lot of builders competing and just being very creative with the way that they're offering their interest rates. So we're here to let people know that they can also do the same thing on existing homes as soon as they speak with you and with us and determine what's best for them. I think that they'll leave really understanding what their options are and applying some of these strategies as well.
Absolutely. Guys, we've been serving the Greater Triangle area since 2011. So we've helped a lot of people relocate and buy homes, not only new construction or custom homes, but resales like Johan said. And you gotta know that there are so many solutions out there. You just need to know about them. And that's about it. So let's go into some just simple explanations from Johan about what does this even mean, buy your rate down, or the points, right? The definition of a point. What is a point per se?
Yeah, great question, Yoana. So a point is essentially 1% of the amount of money that you're borrowing. So we have an example for you here. You'll notice that the loan amount is $480,000. So 1 point is 1% of $480,000, which is $4,800. And you'll hear different points. You'll hear half a point, a quarter of a point, or 1.5 points. And all it means is you're taking that amount as a percentage and multiplying it by the loan amount. And the result is the money that you're paying up front. You're paying that at closing. So it's going to tack on to your closing cost. And the expectation is that over time, you're going to be saving more than what you're spending at closing with the monthly savings that you're going to have because your interest rate is going to be lower than the market rate.
Absolutely. Can we dive into your slides, please?
Let's do it. So here is the scenario that we have. We have a price of $600,000 with a loan amount of $480,000, down payment of $120,000. And Yoana, I just have to let everybody know that this is not real numbers. We're just working here with a scenario. And, I do encourage everyone to reach out to their bank and their loan officer to get a loan estimate to make sure that they're seeing real numbers when it comes to their particular situation, because everyone's situation is different, as we know.
Yeah, absolutely. And you guys, we've decided with Johan that we're going to put 600,000 because in Cary, for example, you can find a home at 600,000, brand new construction as well. But you can find a resale home that is in a great location with great schools, with a yard. Just, it's a good price point for Cary, I feel, and for the surrounding areas. So Johan, let's just say that. So again, if you buy your rate down, you have to understand a point is a percentage of the loan amount. So it's 1% of the loan amount, which would be, if you were to buy 1 point, it would be you would be paying upfront $4,800. But let's just say I have 12,000. So I don't just want to pay 10,000. Like I have a little bit more money that I can just give the bank. What would that payment per month look like for me if I were to drop my rate and pay upfront $12,000? And what would the rate be?
Yeah, so 12,000 would essentially be 2.5%, right, of 480,000. So that's going to bring your rate down to 6.75. So, I guess what we're trying to let people know here is you don't just have to buy 1 point. You have the option of buying more than a point if it makes sense to do it, right? And I think that's what we're going to talk about here. How do we analyze if this makes sense based on my particular situation? Maybe you're getting a concession from the seller and you're trying to figure out where to allocate the money. And this is a good example here, Yoana. So you'll save, if you do invest $12,000, at least $240 a month, but it's going to take you 49 months to recoup your investment, right? So saving $242 a month, by the time 49 months passes, you have recouped your investment. And then, as you can see on the right-hand side, you will save a lot more money if you keep this loan for 30 years. But that's the main question, Joanna. I think people are wondering, when are rates coming down? People that bought, during this year and maybe in the middle of last year, have had the expectation of refinancing once rates come down, and that's what we're not able to predict at this time.
Yeah, so we don't know exactly. You can't buy a house saying, "Oh, I know for sure the rate is gonna drop." But if they would drop, which is the idea that inflation should drop and things can actually come back to some sort of a better overall situation for everyone. If that's the case, then does it make sense to buy the rate down, and for how long? And the reason I said $12,000, for example, is because it's easier for me, or it's easy enough for me as a realtor to negotiate that from the seller, so it's not breaking the bank for them, especially if they can't sell their house at the moment. So it's not difficult for me to negotiate that. And again, you're getting that from the seller, right? So that's how I'm negotiating for you. You're not paying it. My goal is for the seller to pay for you. So Johan, just so you know, we're still here. What I'm seeing is I'm still seeing the first slide. I'm not sure if move to another slide. Okay, so by paying that money, you are saving 242, I believe, right? And you said that you would recoup that, of course, in
48 months.
Yeah, exactly. So it would take a while. So you don't want to necessarily sell the house in that period of time, right? Which is taking us to the questions that we ask you up front. Very important. Me and Johan will ask you personal questions, right? But then let's say, so there are two scenarios, right, Johan? Or do you want to add something else in between?
Yeah, so what I do want to add, Joanna, is that there are some things to know, that there's some limitations, right? Let's say if you're getting a seller credit, for example, there could be a limit as to how much you can get from them to apply to these points. And also depending on the program, the price could be different, and the situation is going to be different for everybody, okay? So this is just an example. So I want to introduce the concept, Joanna, of a temporary buy down, right? So this is a permanent buy down here. What it means is that as long as you're paying this money up front at closing, for the rest of the term, the 30 years of the mortgage, your rate's going to go down to either 6.75, as we just discussed here, or whatever you choose your interest rate to be. But then we have a temporary buy down option, and I'm going to make this just a little bit bigger here, Joanna. At the bottom, you'll notice that we have a 2-1 buy down and a 1-0 buy down. And this is going to be a new concept for everybody. But what that means is that on your first year, your interest rate will go down 2%. And then on your second year, your interest rate will go up 1%. And then on your third year, all the way to year number 30, your interest rate is going to be the market rate, right? Which in this example, we determined that the market rate was 7.5. So the cool thing, Joanna, about this is that you're going to be able to reduce your rate even further than the 6.75 that we were just showing in the previous example, where the total payment was about $35.88, including estimated taxes and insurance and all that. So you'll save more money on a monthly basis. And we have this 1-0 buy down option as well, which means that on your first year, your interest rate would go down just 1%. On your second year, it'll go back to where the market rate is. And on that first year, you would save $38.67.64, or basically, Joanna, it's a prepaying the interest. I mean, that's really what it is, right? And I think that right now, with the market changing a little bit and becoming a little bit more favorable on the buyer side, people are negotiating a seller credit to be able to apply that towards this buy down, this temporary buy down. And the cool thing about it is that you do not lose the money, right? So if let's say rates go down next year in 2024, they go down in 2025, as many people are projecting and hoping for, whatever money was not used, you're going to get that back. So you get it back as part of your escrow return, or you can decide to apply it towards your principal balance, so you're not losing the money. As compared to a permanent buy down, let's say you spend the 12,000, but just 6 months from now rates go down, you're very interested in refinancing at that point. Well, you haven't recouped your $12,000 investment, right? It was about 40 something months that had to go by, but you refinanced in just a short amount of time. You basically overspent some money on that buy down. And I do have a slide where I show Yoana that comparison. So this is what it looks like here. Basically, on a temporary buy down, in 2 years, you're saving 11,437 on the right-hand side. You'll notice that. And then on the left-hand side, with the savings and the interest rate, you're only saving 1,962 if you were to buy the rate down to 7.25. And this was the one that cost 1 point. So you spent $4,800, but you only saved 1,900. So you overspent on your investment there, about 2,837. And in the middle, on the left-hand side, you'll notice that.
Yeah, so the temporary buy down definitely allows you to buy down more, to drop your rate more, right? So it's definitely a better solution. I think that a lot of people don't know about this, right?
You're going to save more money on a monthly basis for the first 2 years. And again, we're starting to see a little bit of light at the end of the tunnel. Right now, interest rates are starting to come down. Luckily, the Federal Reserve didn't increase the federal funds rate in this last meeting. We're not sure what they're going to do, but in the future. But I think everyone is very hopeful that interest rates will start coming down, and that could create some opportunity for a lot of home buyers, but also for people that bought and are waiting to refinance, or people that are going to buy now, towards the end of the year with these rates somewhere in the sevens, and refinance in the future without having to overspend on this permanent buy down. So definitely look into a temporary buy down.
Absolutely. Thank you so much, Johan. And you guys, if you thought this was valuable, please let us know in the comments. Ask questions. I will put Johan's information there so you can connect with him and connect with me for any information regarding the real estate market and pricing and neighborhoods and whatever makes a big difference for you at the moment, so that I can make sure that I can help, do my best to help. By the way, we do have several other videos that we posted, and we do post one video every week. So if you're curious about coming to the Cary area, we do have a really cool video that you can watch. There's pros and cons of coming to Cary. I just say Cary right now because a lot of people have connected with us and asking us about the schools in Cary. And one specific person asked me about rate buy downs, and this is the reason why I've decided to create this video. So thanks again for watching and for being here and supporting our channel. Comment, like, subscribe, and let us know how we can help. Take care. Thank you, Johan.
Thank you, Yoana. Thanks, everyone.
Bye.